analyst ratings for Micron have been fairly off, and I just wanted to double click. I'm working on pulling up the latest ratings right now. Here we go. So majority says it's a buy. The lowest target in the last 6 months is $310, which is basically 60% downside. The highest target is $1,000 per share. That's 25% upside from here. And the average is a $530 target, which is roughly a 35% downside. And you can see how the average monthly targets have climbed
As the
basically with
stock
the
prices
stock price.
So
Yes.
the analysts are that brilliant. As the stock price goes up, they raise their targets. That's phenomenal.
Yes. Um, and who was the one you called out last time?
Well, let's give a little bit of credit where credit is due. If you scroll up to the top there, who is
Yes.
that? D.A. Davidson, Gil Luria maintains
Yes.
a $1,000 buy target. So there's a person who seems to be getting it. TD Cohen did raise, back in April 28th. So before most of this run up, they raised their target from 550 to 660. So that was before I think it hit 660. So it wasn't after the fact. So some of them, have pretty decent targets on it. The one that was sort of like fascinating to me was if you scroll down, I think it's Citigroup.
Hmm.
This one in particular, Atif Malik, he lowered his price target from $510 on March 31st to 425 after the earnings had come out, crushing everything, raising the guidance for the next quarter, and then he lowered it down to 425 after having all that additional information. So, the biggest thing I wondered about this particular analyst is what was he thinking that he thought deserved a $510 price target, and then what happened in his mind that, based on the results, that he thought, okay, now I'm going to lower them. And this
Right.
this is what fascinates me about analysts and the way in which they go about um, doing these price targets. So, obviously I don't pay a lot of attention to the analyst ratings, but I have been saying for some time on X posts that I believe that, Micron deserves to be roughly an $800 stock uh, based on its historical performance and based on the criticism that memory has been historically cyclical. Taking that into consideration, even that memory is cyclical, okay, we'll give it a discounted price, but even that discounted price, deserves roughly an $800 valuation. That's what what I had come to the conclusion of. And then if they actually meet or beat the expectations of this quarter, which is 32 billion in revenue and $19 per share of profits, then in that scenario, they might need to actually be $1,000 or greater stock price because those prices just that kind of revenue and profit performance justifies an even higher valuation. And when I was saying that the stock was hovering between $300 and $400, and then all of a sudden it has shot up in the past couple of weeks to about $800, right? So now I'm like, okay, this seems reasonable. By the way, at $800 a share, it has a forward PE of roughly 9, which is about a third of everybody else. So that's still discounting it by about 2/3 from everybody else. What the price that everybody else gets, whether it's Nvidia or Microsoft or Apple or Google or if you go to AMD and Intel, they get like ridiculous valuations going, with forward valuations. And Micron is getting a discount to all of them. And, so you can't tell me that Micron, you can't convince me that Micron is an overvalued stock at $800 per share when it has a forward PE of 9. So that's been my perspective on it. That said, as the price starts to climb and as it becomes a larger and larger portion of my portfolio, it's already hovering around 30%. I might start trimming. I mean, like, I have a lot of it. I bought a lot more of it than I even wanted to when, after this quarter when the price sort of plummeted. So I might sell some of those extra shares, if you will, that I bought, but I haven't started selling. So far I haven't sold any shares. So
Does it make you uneasy how quickly Micron has played out? Because you started investing in January. Typically, the stocks you invest in, you're holding it for at least a
a
year
long time.
before they actually start moving. And it's not like they're stable. Typically, they're going down and they're going
Yeah.
up, they're going down, right? Micron has played out, at least from my perspective for you, fairly seamlessly. Um, how do you
Yeah.
feel about that?
So it's interesting because normally when a stock comes on my radar where I love it, it's on its way down, and that's the reason I love it. Like, and that has occurred with Netflix in the past, and Meta, and Uber, and there's like a whole bunch to sort of like name, and because of that negative momentum, oftentimes they just keep going. And like more recently, things that I have in my portfolio currently, Rivian or Bumble, or
Yeah.
uh, uh, they go down for some period of time before the turnaround eventually happens, and the companies start to like skyrocket. With Micron, I did spot it at a time that it had upward momentum at the end of the year, and I ended up buying it at an all-time high. And normally I buy things slowly because they're on their way down. But with Micron, I bought it very quickly. I don't know if you remember, but like
I do.
within a very short period of time, it was 10% of my portfolio because like it had this upward momentum, and I didn't want to miss out. So it's rare that something has upward momentum and it's undervalued. So the
Right.
combination of something having an upward momentum and being undervalued is super rare. So yes, like buying something and having the price double and more than double. I think it's like now 2.5 times what my average buy-in is super rare. I mean, like that just doesn't happen in 4 months. But in Micron's case, it had the upward momentum and it had the added uh, parameter that it was very undervalued, and that's the reason. And that's the reason it has just skyrocketed in such a short period of time.
Got it. Okay. Let's talk about you made, and we're going to stick on this Micron train. You made what I thought was a really interesting post on X. Let me pull that up
Oh,
where
yeah,
you highlight 7 different stocks. You didn't say what the stocks were. You just showed some key fundamentals. And your point being more or less, you shouldn't need to look at a stock chart or price chart
price
to
chart.
know if a stock is
Mhm.
a good or bad investment. This is what you should be looking at.
Yeah.
So
Okay. So to be clear, the reason I put together this chart is so that people, like, I think people in general put too much emphasis on the historical price chart of a stock. Now, it is true that if the historical price chart of a stock happens to be like it's making new highs or new lows, that's considered having momentum in a particular direction. Um, but you never know when that momentum ends. And what happens is the reality of the company's revenues and performance and profits catches up to every company eventually. Well, maybe that is not true for every company, but it generally it's generally a true statement. It's the sort of like Warren Buffett of style of investing, where you're buying things that are at reasonable price, right? And that's what you want to do, and you want to avoid things that are not at a reasonable price. So if you were to sort of like take those fundamentals, and what are those fundamentals? It's revenue growth. Um, it's the earnings per share, right? It's the growth of earnings per share. It's their current PE or their forward PE, which sort of reflects the price earnings ratio based on projected growth. If you take those sort of like basic parameters and look at them for a handful of stocks, and these are like 7 stocks that I picked, which one looks attractive to you? And there's sort of like no question that some of them look very unattractive. Like whatever number 7 is here, it's very unattractive because it has a current PE of 388, a forward PE, even after it grows for the next year, roughly 184 forward PE, or there's one number 4, it's 117 forward PE. It doesn't even currently have profit. Um, this, if you were to look at this chart, there's like one clear, like amazing opportunity here. That's number 5. And then there's others that seem like more reasonable, like number 6 has a forward PE of 25. Okay, that's more reasonable. Number 3 has a forward PE of 30. Number 2 has a forward PE of 32. So, which stocks would you want to buy? And, that might be interesting for whoever's watching right now. If you guys wanted to say what number you would be interested in, that
Right.
would be
Or what stock
as
do you
part of the
think
chat.
correlates to which uh, number?
Yeah, but anyway, so I put this together, and of course, there's sort of like this is sort of to debunk, in my view, that like price history matters a lot for what a good stock is, and I don't view it that way, and that's the reason for this tweet. So do you want to show us the the version of it that has the?
Yeah,
Okay.
I think it would be unfair if we didn't.
Yeah. So do you have the version that has Meta in there
Has
as well,
Meta.
or?
I
Yeah.
should. So you added
Oh,
one
there you
after
go.
the fact, right?
Yeah, I had forgotten to include Meta in the version that didn't have uh, the names. So adding the names to this chart, basically, for those who are listening, Micron, out of the following companies: AMD, Apple, Google, Intel, Micron, Nvidia, Tesla, and Meta. Micron has the best uh, fundamentals, right? If you take away the fact that like Micron might be cyclical, or the arguments, I should say, not the fact, but the arguments that Micron is cyclical, and memory prices might eventually plummet or whatever. If you take those arguments out of the picture for a moment, Micron has the best fundamentals by far. Everything else on that list, every other stock, has a premium that is anywhere from 138% on the low side of the premium that you have to pay for that stock, all the way to a 2,200% premium on a relative basis, on a per dollar of profit basis, relative to Micron. And the 2,200% premium is a company called Tesla, right? But even Intel, for example, which is also in the semiconductor business, has a 1,300% premium over Micron. AMD has a 488% premium over Micron on a per dollar of expected profits, future profits in the next year. So taking all that into consideration, Micron, even at $800 per share, to me, feels like it's still undervalued, relatively speaking. And then the second company that I love on that list, of course, is Meta, which is also, relatively speaking, relative to Google and Apple and Microsoft, is still seems extremely undervalued and growing faster.
Right. Now, with all of that being said, obviously there are things outside of the context of these metrics that can affect the stock price and could be correctly affecting the stock price, right? Like if a company is changing businesses or transitioning,
That's right.
like this isn't a end all be all per se, but I do think it's a really interesting way to look at the market. And I commented on this on Twitter, but I did, as you know, recently bought Micron and recently sold Tesla, and it was because of the fundamentals and how it was pretty clear Tesla just wasn't making sense anymore in my portfolio, and it wasn't making sense not to have Micron in my portfolio.
Very cool.
And this also highlights, which you kind of got into, but I just want to say it again. It highlights why you're not buying AMD or Intel, but you're very interested in Micron. Is they're two very different stories, and even if they're in a similar space.
Yeah, that's exactly right. So let's just take the argument that AI is in a bubble right now as a fact. Well, if AI is in a bubble, would you want to own something that is trading at 100 PE, or would you want to own something that is trading at 9 PE? Because if it's in a bubble and their profits drop and they get cut in half, or maybe their profits drop at 70 or 80%, well, guess what happens to the stock price if the, uh, like if they're trading at 100 PE and all of a sudden their profits drop 80%. Well, now they're trading at a 5 times higher PE, a 500 PE, as opposed to one that's, trading at a PE of 9 and its profits drop by 80%. Well, 5 times higher than 9 is now it's trading at 45 PE, assuming the price doesn't move, right? So again, like if the price gets adjusted and everything gets traded at roughly the same PE, this is sort of like how I think about it, then a company like Intel or AMD has far more to fall than a company like Micron.